So the S&P just logged its 8th straight winning week. This is the longest streak we've seen since 2023, and the Dow hit a new intraday record high this past week. So how much longer can the rally go on, and what's going to happen to rates? Because this past week we saw them go up when I thought they were going down. So the Dow Jones Industrial Average closed the week at 50,579. So we're well over the 50,000 mark. It was up 2.1% for the week. Year to date up 5.2%. S&P 7473. Unbelievable, right? Up almost 1% for the week. Year to date up 9.2%. NASDAQ up about 0.5%. Year to date up over 13%. And the Treasury, that's the big story right now. The 10-year Treasury and interest rates 4.58%. Remember, we were talking about that 4.5% threshold. So we've crossed it. We've closed above it. It's at 4.58 right now. And that's the big question. What's going to happen to rates? Crude oil, $97 a barrel. Rolling around there on the streets, you see the price at the pump and on the tank. I know, shaking your head. Year to date up 35%. Whew. And the MSCI International Index finally in the positive, up 3.3% year to date. The rise in yields, that's what I was just talking about with 10 years. It's approaching levels that could begin to weigh on the stock market, especially after a strong 2-month run we've just seen in stocks. Why? Higher rates pressure valuations on companies. It just becomes more expensive to borrow money. And as those rates creep into the 5-6% area, bonds become competitive to stocks and could test the rally. We're seeing very strong investment demand. We're seeing improving productivity. Earnings remain the key support right now for equities, with first quarter profits rising at the fastest pace since 2021. So where's the blemish, if you will? It is in the narrow leadership that we're seeing right now, which is bringing everything up. The fixed income world, the rise in yields. This is a double-edged sword. How? Higher yields, well, they pressured the near-term rates right now higher. You see U.S. investment grade bonds are going lower for the year overall, but they also have some opportunities out there.